Crypto Hotep here with another investing video. We are on week 33 of the Family Portfolio and Dividends Tracker. If you're unfamiliar with that or with this concept, feel free, do yourself a favor, go to the channel, go to week number 1 and look at that video. That's where I go across my whole methodology, why I'm doing this, and my steps in getting this accomplished. So basically, what I did was I selected some stocks through research, mostly dividend stocks, some growth stocks in there as well. And then I lined them up. I asked my family what their favorite companies are. If they only had $1 to spend, what company would they spend it at? They chose those stocks. And then we used M1 Finance as our broker of choice. And the reason is because their technology is pretty superior, where not only can you have one main portfolio, but you can have sub portfolios in that main portfolio. So the main portfolio is the family portfolio, and within the family portfolio are all of our family members and their designated stocks, and you'll see that shortly here. So every week we go over this portfolio, we talk about the stocks, we talk about the market, we talk about our emotions, what we've bought, what we've sold, which we won't really be selling a lot, but if we have to do some alterations on positions, that's where we highlight those here in these weekly updates. First and foremost, these videos are for my family and my own edification, and hopefully they'll find these videos when I'm gone, and hopefully they will be helpful and educational for them. If you find them educational, helpful for you, great. Feel free to like, subscribe, comment. Let me know what you think, and let me know what you want to see. But by no means is this financial advice, or are we telling you what to invest in. Please do your own research before you invest into crypto, stocks, metals, anything of that sort. And with that being said, we'll jump right in. Now, before we go to week 33, we have to go to week 32. So week 32, we saw our balance creep over 1,300. That was another milestone, which was fantastic. The family portfolio creeping over 1,300. We started this portfolio in, I want to say, the end of February. So the end of February, we started this portfolio, and the balance has slowly and surely been creeping up. It's like the little engine that could. So we were cracking 1,300. Dividends earned $7.90. Money weighted rate of return year to date was 18.15%. This week, let's see where we are at here. We are at $13.74.80 year to date balance. And then the year-to-date money weighted rate of return over 19%. That's fantastic. With the dividends earned of $8.12. Just to put in perspective, the S&P 500 typically earns between, I want to say, 8 and 10% every year. So I always like to make sure if we can have a rate of return above that, then we're doing something good. So the family portfolio is really trekking along on the upswing here. So let's see what's been going on since last week. So last week, between this and last week, we've just had a little bit of dividend activity, which was this 3 cents here. Now, if this is your first time watching this video and you say 3 cents and you say crypto hotep, that's only 3 pennies. I'm not worried about 3 pennies. I get it. Totally understand what you're saying. But the premise about dividend investing is not the fact of the amounts when you first invest, because if you're only investing with small capital, those dividends are going to be small. But it's more of the snowball effect, where you're continuously getting these dividends and you're continuously building your positions in these stocks, because the more holdings that you have in these stocks, the more dividends that you will get, hopefully, if the company doesn't cut their dividends or decrease them. But if you hold good, well-established, and great companies, that's more than likely not to happen, and those dividends will actually increase over time. We did have a deposit, our regular deposit, $15 every 2 weeks. And then we did buy. We had a couple buys here. So we bought Nintendo. Those were for the kids. McDonald's, which I believe might be our oldest micro strategy. I did buy some micro strategy for my portfolio. Coca-Cola, which was my portfolio, and then Tesla. Again, whole family incorporated Tesla in their portfolio. We all watched Robot Day, and it was a phenomenal event. At least that's what we thought. It was a phenomenal event. Elon's doing fantastic things with Tesla. And I think the biggest thing for me was watching his rocket ship come down to land and them actually grabbing it out of the air there. That was fantastic. And that actually made me put Tesla in my growth section of my stocks. Then we actually had an additional deposit. So I was blessed to have a bonus payment from my work, and I added $50 into this account here. And there were some buys, 12 buys here. So let's see what we bought. So we did buy some Pfizer. Okay. We got some Starbucks, which was long multiple portfolios. Johnson & Johnson, my portfolio. Costco, probably our middle and oldest portfolio. Tesla, this was across everybody's portfolio here. Nintendo, these are kids here. Apple, Palantir was me. Target, DTE, also me. CrowdStrike, also me. And then McDonald's, also across multiple portfolios. So we had a nice array of buys here. And typically what I do when we segment out the deposits, I will go to everybody's portfolio and designate a certain amount. And then I will just have M1 Finance make those buys for me. And that's why you see kind of multiple buys here. So with that being said, we can jump right into the portfolio, or the review of the portfolios, and we always go bottom to top. Unfortunately, my wife's stocks are at the bottom again, but I will say this: the balance did increase. Our money weighted rate of return is below negative 30% at 29.37%. We are still holding Celsius. Celsius is still around that $30-$31 range there. So it did peak up to 33, then came back down. So we're still holding Celsius, and we're still holding strong. Not really worried about that. Google, Pepsi, and then as always, as I mentioned, we did add Tesla, and even the quick move on Tesla. We just added Tesla, I believe, last week, but already up 4% on Tesla. Pepsi doing what Pepsi does consistently, up over 3% on Pepsi. And then Google, I mean, you're not going to beat Google. Google is, as of right now, I think it's a very undervalued stock. And I think, it's a very good stock to hold. Let's go to our middle. Our middle stocks up over 8.5%. And this is, I consider the middle stock kind of the consistent portfolio, right? It's not like huge, monstrous gains, but there's also no losses. It's more of like in the middle, consistently doing what it does. And that's why that weighted rate of return is like over 8.5%. Dividends 18 cents, and like mostly everything is green here. Typically Nintendo's not in the green, but it'll like waver between negative 2% or it'll be up positive 2%. So where it is right now, I'm not really concerned about that. That's what it typically does. But you'll see Amazon, Costco, the big players, Starbucks, Target's in there. And then as we just said, Tesla's in there up over 4%. Okay. Let's go to our youngest. And our youngest up, and this is where we get to some of those double-digit gains here year to date. Year to date, over 29%, fantastic. Dividends earned over or about 14 cents. Only 4 positions in this portfolio. We just have Nintendo. Again, that was down, right? So very similar to the holding in our middle, in the red for Nintendo. But Tesla up over 65%. That's not a typo. Our youngest had Tesla in his portfolio from the very beginning of these videos. That was one of our youngest companies that they felt they wanted to hold. And they held through the ups, downs, and we were buying Tesla, sparingly, of course, in this portfolio. While Tesla was down, there was a lot of FUD earlier part of the year. And Tesla was down for like, I want to say maybe 3-4 weeks, maybe 5 weeks. Just kept buying it because it was cheap, buying it. And eventually it turned around. Tesla's a great company. So this is a huge percentage gain. Again, if you're just looking, if you're concerned with the value of it, that's not really my concern. My concern is more of picking quality companies. The money will be there if we continuously just funnel money in the account. So the balances will grow naturally. But we want to make sure that we're picking quality companies and that we're picking them at a decent enough price and that we have a decent enough gain with them. And over 65% year to date, nobody else is beating that. That's fantastic. Apple up over 34%, and then Starbucks, we were buying Starbucks at the low as well, up over 26% on Starbucks. And let's go to our Otis. Our Otis has really outpaced everyone, and as you can see, our oldest chart went from 113 to 12, 316, and then 472 because of those deposits that our Otis made, and kind of where our Otis said, hey, I want to invest into these companies. I want to put money into these companies, and it was great. So money weighted rate of return over 41% year to date. That's fantastic. That's a gain of around 33%, or a little bit over 33.5%, or $33, I should say, $33.56 market gain. And then dividends earned 56 cents. Again, the big heavy hitters, right? These are very solid and stable companies that are going to be here for decades, and that some have been here for decades. Apple, not going anywhere. Costco, not going anywhere. McDonald's, even though they had that little scare with, I believe, the onions in their burger this week that caused a big stir, not going anywhere. So, and Tesla, as we mentioned, added Tesla as well, and up over 22% already on Tesla. Wow. This is a great portfolio. Our oldest, for a lot of times, if you watch past videos, they only had three companies: Apple, Costco, and McDonald's. And that itself, that portfolio was doing well. So now that you add this outlier, Tesla, the weighted rate of return is just substantial. Very good portfolio, though. And last but not least, let's go to mine. Let's see what we have here. So mine is up over 14%. Dividends earned $6.93. Market gain of $184.65. Everything is in the green again this week for the sector. I think I'm going on about a month and a half of everything being in the green. I love to see that. If we look at growth and meme stocks here, over 35% weighted rate of return. Again, this is what I have. I have Tesla, Palantir, CrowdStrike, DTE, and MicroStrategy, which MicroStrategy is crazy right now. So me being a Bitcoin believer and a Bitcoin bull, I had to have a position in MicroStrategy here. But that growth in meme stocks, of course, they're going to have substantial gains, but because of the volatility of it, it's only 5% of my portfolio. Most of my portfolio is technology, consumer staples, industrials, real estate, and finance, with restaurants and food in there as well. Typically, I have that spread across somewhat evenly, throughout the portfolio. And then I have a little bit, quote unquote, fun here with the growth in the meme stocks right here. If we look into technology, technologies has been doing well across the sector, because you'll see why. We had NVIDIA up over 55% with NVIDIA. And again, if you're looking at these, don't look at the balances. That's the biggest thing. And that's, because your mindset's going to change when you look at balances, because you're going to say crypto hotel, that's only $15, that's only $27. That's correct. But we are adding to this consistently every week. It's just going to take time. That's all. I think the biggest thing is you just need to look at the gains and returns, because then your mind can shift and say, hey, if I can get a gain of 55% year to date, man, say, for instance, this $15 turns into $100, that gain is ridiculous now. It's not, it's not the $5.52 now, right? So I think, just having the mindset and just looking at the gains and the losses as well, because there are some, like with AMD, down over 21%. Everything's not going to be rainbow and butterflies here, but just having that mindset and just looking at the gains and returns versus just the value. And I think the investing journey will be good for you. But as always, guys, we will close this out. So this week we ended the balance at $13.74.80. Weighted rate of return for the family portfolio at $19.03. Market gain of $104.02, and then dividends earned of $8.12. Whew, man. And I, before we end this, just keep in mind, we started these videos. I want to say we started these videos around February 16th or February 20th, at around the $200, $300 balance range here. And it is not the end of the year yet, and we are over $1,300, right? So again, building wealth takes time. If you want to get rich quick, you might get broke faster. So I think if you develop a system that you can consistently do every 2 weeks, every month, and select quality companies and just let the money compound and the interest compound, you'll be fine. And just set it and forget it. And that's one of the reasons why we use M1 Finance, because they make it so easy. But as always, guys, if this video was helpful, feel free to like, subscribe, comment. But thank you and happy investing.